Hello students, welcome. This is Ms. Mercado speaking. As you all know, we've been having issues with the coronavirus. Everybody's taking precautionary measures. So my online courses have not been affected. Everything will stay the same because we are already in an online environment where we don't need face-to-face. The actual courses that are being affected are the face-to-face courses. Now, I am currently teaching Principles of Financial Accounting in a hybrid method, which is where we meet twice a week on campus. And how my course was structured, it was basically problem solving in class. And then the students would complete their assignments online at their own time. Now, that face-to-face interaction has been removed due to the coronavirus issue. So now my traditional students, or my hybrid course, has been transitioned or will be transitioned to an online environment. For me, that is not a lot of work. I know that faculty are being given an extra week to work or prepare to transition those face-to-face courses to online courses. For me, I don't have that issue because my course from day number 1 has been set up kind of like in an online environment. So I am ready to rock and roll starting this week. So we shouldn't have a break. And I don't want to give that extra week because if I do, the content still needs to be covered. Okay, so what's going to happen is if I delay it a week, then students are going to have to double up on their work for one specific week, and that's going to be the same for all courses. So it's just going to affect the student at the end of the day. So what I'm doing is I'm continuing. We're back from spring break, and we're going to get started on the next chapter, which is chapter 7, dealing with internal control and cash. Okay, so the only difference is now going to be, instead of me going and meeting with you at 8 in the morning in Star Campus, now my traditional students are going to have to, complete all of their assignments online, very much like my online students. Okay, so my online students should not see any difference in what they had been doing or will be doing. Everything stays the same for my online. The difference is going to be more for my hybrid students that will no longer be seeing me face-to-face until this issue with the coronavirus settles down a bit. Okay, so meanwhile this happens, I am going to be recording these lectures for my students. Okay, so before I would actually go to class, prepare, and we would do problem solving for about 4 hours a week. Okay, now creating videos is very time consuming. Okay, I have to prepare for the lecture, I have to set up my lectures, I have to record my lectures, I have to upload my lectures. So it does take about a good 4 to 5 hours for me to create one video. Okay, so I wasn't doing these video creations before because I do teach 5 different courses, and it becomes very time consuming to do this. Now that I don't have to go and meet with my students face to face, what I'm going to do is I'm going to use that time that I would go face to face and instruct to set up my videos. Okay, because I am setting up these videos for my hybrid classes, I might as well share them with my online classes. Okay, so that way everybody has the same resources. Okay, this is something I have been creating videos, but not for all of my classes because of the time constraint that I do have. I do spend time in my office doing office hours. I do spend time outside of my office teaching. I do spend time outside grading and doing other coursework, attending events, and so on and so forth. So creating, videos is for all of my classes was not very accommodating until now, where I am going to be using my instruction time to create these videos. Okay, so these videos, I am not going to cover every single problem. I'm going to cover most of them. Okay, but I do want you to understand that it's your responsibility. It is the student's responsibility to read the chapter. They have to read the chapter before they attempt anything. Okay, and I've had so many issues where students are lost, and they're lost because they haven't read. Okay, reading is the first thing that should be happening every single week. We read. After we read, we review the PowerPoints that are posted on Blackboard. Okay, those are going to give you an overview of what's happening in the chapter. Okay, after you read, after you review the PowerPoints, then you listen to my videos, which is what you should be doing right now. Okay, I'm going to try to go at a slow pace. These videos are going to be a little bit long because, as my traditional students know, we spend a good 4 hours of my class time in face-to-face covering problems, and sometimes we don't get to finish them, okay? So I'm going to try to cover as much as I can. The videos are a little bit long, so bear with me. Pause it, resume later, do whatever you need to do. But I hope that they help you out in solving your homework problems. Also, Cengage has embedded within your actual homework assignment short videos, which is what my online students have been using as guidance, okay? So you can continue using those videos as well as supplements, okay? Whatever works for you. And if you have any questions at the end of the day, I am here to help you. But you do need to ask. I don't know what's going through your mind. So if you do have questions, let me know. You can still communicate with your fellow classmates through Blackboard. Send them a message. I'll be opening up some discussions. That way, if you have questions, you can post your discussions on Blackboard and we can communicate as a group, okay? You are not alone in this. Yes, this is something that I have never experienced. I've been teaching for 5 years, and the coronavirus has caused some changes. But we will get through this. We'll get through the semester. And the whole point is that we continue learning, okay? And I'm going to try to facilitate it as much as I can. I am here for you. And we'll get through this, okay? So, chapter 7, I'm going to start off, before you listen to this video, make sure that you've read. That way you can follow along to what I'm doing, okay? But the first exercise that I'm going to cover is exercise 718, okay? So, I've got the exercise here on the screen, okay? And it reads, the following data were accumulated for use in reconciling the bank account for Creative Design Company for August 2016 or whatever, 2026, whatever the number is, okay? And then they give you a whole bunch of transactions, okay? We are being asked to prepare a bank reconciliation using the format shown in Exhibit 13. I've already had that set up for you. And then they're asking them some other questions. So the first thing that we're going to be doing is we're going to be creating a bank reconciliation, okay? A bank reconciliation of our cash account. Our cash account is super important, okay? It lets us know how much money we have available to spend. It's kind of like balancing your checkbook, okay? So having proper internal controls is super important so we can safeguard our assets, which in this case is cash. We need to know what has cleared the bank, what is pending to clear the bank, if the things that cleared the bank were authorized by us, certain service fees that are charged by the bank. So we need to make sure that our records, the company's records, agree to the bank's records, okay? So what we're going to be doing is we're going to be balancing the reconciliation. We're going to be balancing the bank statement. Every month we get a bank statement. Nowadays, with technology, you can actually put up your bank account online every single day. But for the most part, banks usually send out a monthly statement to most organizations. That way, they let them know, everything that has happened during that month to their account. Okay, so we're gonna balance that statement, that bank statement, to the company's records. Okay, so we can figure out exactly how much money do we have available. Okay, so let's start off. Okay, so it says. The first thing that they provide us here is the cash balance according to the company's records at August 31st. So according to this information, we have $20,870 per the company's records. So the top part, let me start off here. We're going to have our cash balance according to the bank statement. Let me make this a little bit bigger. Okay. And then down here, we're going to have the cash balance according to the company's records. So what we're going to do is we're going to balance the two. Okay? That's what we're going to do. We need to make sure that we identify if they don't balance, why are they not in balance? What's causing them to be not in balance, okay? So the first thing that they give you is the cash balance according to the company's records. That's $20,870, okay? So I'm going to put that down here, okay? That's my balance that I'm starting off with to reconcile. So according to our records, we have $20,870 in cash, okay? Our second transaction says our cash balance according to the bank statement is $37,600. Okay, so you can see here that there's a major difference between what the bank has and what we have, okay? So what number is right? Well, at this point, we don't know what number is right because there's reconciling items, which we need to figure out. Okay, but according to the bank, you have 37,600. According to your books, you have 20,087. Okay, now let's go to item number 3, checks outstanding. What does that mean? That means that the company wrote some checks, okay, to pay the light bill, the rent, the water, whatever the case might be. They wrote out a bunch of checks, okay, and they mailed them out. Okay? They sent them out so they could be processed, okay. Now these checks are outstanding. So what does that mean? That means that the company mailed out those checks, but those checks have not cleared the bank, okay. So the company, when they issued out those checks, they went ahead and they deducted those amounts from their balance. So their records show a deduction. It already shows that, we've paid them out. The bank has not cleared those checks, so they're not aware of those checks. Okay? So we need to record that reconciling item under the bank statement. Why? Because later on, a couple of days from now, those checks are going to begin to clear the bank. Okay? So we're going to have our adjustments up here for the bank. Okay? Adjustments. Okay? So what we have here is we have outstanding checks. Okay. Well, before I do my outstanding checks, there's 2 types of adjustments. We have our deposits in transit. Those are deposits that have not cleared the bank, and we'll go through that right now. So those are our major adjustments. We have deposits in transit, and we have outstanding checks. Okay. Okay, so my outstanding checks are checks that have not cleared the bank. I wrote a check, the company wrote a check, they mailed it out. The check has not been cleared. That has not gone through the bank. It hasn't been cashed. Okay, so those checks are still pending to be cleared. So what is going to happen to your bank balance once those checks clear? Well, once those checks clear, your balance is going to decrease. Okay, so I'm going to put the outstanding checks in parentheses because that is a deduction to my balance. These checks, when they clear, they are going to deduct, or they're going to decrease the balance on my bank account. Okay? So that is a deduction. Okay? Outstanding checks need to be in parentheses. Now, this is a common mistake students make. They forget to put the minus sign or the parentheses, and then the system marks it incorrect. It is very important that outstanding checks are put in parentheses or with the minus sign. Okay? So, once again, outstanding checks are checks that have not cleared the bank, and we put them under the bank statement section because this is pending to clear in the bank statement. Okay? These amounts, these outstanding checks, have already been recorded down here on the company's record. When the company issued out the check, they made the deduction down here. That's why this number is so low. Okay? The bank is not aware of those checks until they clear. So they're pending to be cleared. That's why we're putting it out here. Okay? Item number 4. Deposits in transit not recorded by the bank. $7,500. Now, what does deposit in transit mean? Okay. Banks usually have a cutoff time. Okay, I work in banking for over 15 years here, and I know a lot about banking. Okay, but banks usually have a cutoff time depending on the bank that you work for, 3 o'clock, 4 o'clock in the afternoon. Okay, so any deposits made after this cutoff time are not given credit till the next available business day. Okay, so let's say, for example, that I made a deposit Friday afternoon at 5 o'clock. Okay, 4:59. Okay. So I'm the company. I go and I make a deposit into the bank on Friday at 5. It's already past the bank's cutoff time. So that particular deposit is not going to be available till the next banking day, okay, or the next business day. So that's going to mean that the Saturday and Sunday, they're not business days for the bank, okay? Only Monday through Friday. That's when they, settle with the Fed. So that deposit that you made late Friday afternoon will not show up in your account till Monday, okay? So it's in transit, okay? So what did the company do? The company made a deposit. They got their deposit receipt that the deposit had been made by the bank, and they recorded it in their books, okay? So So they've made the deposit and they've recorded in their books. Okay? The bank has not made the deposit yet because it was done after the cutoff time. So now they have to wait. The bank has to wait till Monday to categorize or count that deposit into your records. So that is in transit. It's going to be pending. It's going to be in limbo over the weekend until the next business day. So because it is a deposit, when you make a deposit, that increases your bank balance. So we're going to put that in a positive. That's going to be for $7,500. Okay. What else do we have? It says a check for $100 in payment for an account was erroneously recorded in the check register as $1,000. Okay? So that is a mistake that we, the company, did. Okay? We have a check for $100, and we might by mistake recorded that check in our books for $1,000. Okay? So what happened? Okay? Okay? So what happened is that when we made that deduction, we deducted $1,000 instead of deducting $100. So, okay, so the actual amount was $100, okay, but was recorded for $1,000 in error, okay. So that means that we need to make an adjustment. In our books for the difference of $900. Okay, so what happened? What happened was that we took out of our company's records $900 too much. Okay, we should have only deducted $100, but we deducted $1,000 in error by mistake. So what happens is now I need to put $900 back into my company's records because I need to fix that mistake. Okay, so we're going to have another adjustment section here. Let me fix this. Adjustments, okay? So we're going to have adjustments. The first adjustment we have is the error in recording check as $1,000 instead of $100. Okay? So because we made that mistake where we recorded the check for $1,000 instead of $100, now I need to add $900 to my books. Okay? Why? Because I took out $900 too much previously, so now I'm going to put those back. Okay? The difference. Okay? What else do we have? A bank debit memo. Okay? Now, let me clarify. This could get a little bit confusing. Students sometimes don't know whether it needs to be put up on the bank statement or needs to be put in the company's records. Okay? Under the bank statement, you're going to put things that you really can't control. Okay? Like you issued those checks are pending to clear the bank. So then anything that is pending to clear the bank needs to be put under the bank statement. So if there's deposits that are pending to be posted on the bank's records, you put it up here. If there's checks that need to be cleared through the bank record, you put them up here. Now, under your company's records, those are adjustments that you can correct, either mistakes that you made or items that you haven't accounted for that you were not aware of. Okay? So, for example, here, you made a mistake of recording a transaction for $1,000 instead of $100. Okay, when that check cleared the bank, it cleared for $100. So the bank is okay. Okay? Our mistake is in the company's records because in our books we have that check for $1,000. So we have to correct it by posting the correcting entry for $900. Okay? Now here on item number 6, it says bank debit memo for service charge, $45. Okay? So banks charge a fee to have the account open, at their institution. Okay? So you received your bank statement, and in the bank statement you see this debit memo charge for $45. Okay? So the bank has already deducted from your bank account $45. They didn't let you know. They have authorization to take the money out to cover your service charge fees. Okay? Now you were not aware that they took out $45, okay, until you got your bank statement. Now that you have your bank statement, you can record that service charge in your company's records. Okay? So the $45 have already been deducted by the bank. Now you need to record them on your books. Okay? So we're going to put here bank service charge. we had not recorded this transaction because we were not aware. Now this is a deduction because this is money that was taken out of our bank account. Okay, so it's going to deduct our balance. Okay. And those are all of the transactions that we have. Now we can balance our accounts to make sure to see if they are in balance. Okay. So let's see what we have here. We're going to first calculate our total adjustments. Okay. So my total adjustments are going to be the $7,500 plus the $23,375, and that's going to give me a decrease of $15,875. Okay. So now I can figure out my adjusted balance. This adjusted balance represents the actual amount of cash that you have available to spend. Okay? To calculate your adjusted balance, it's going to be your cash balance according to the bank statement, okay? Plus your total adjustments. Okay? And that gives you $21,725. Okay? That is how much cash you actually have available to spend after these items clear. Okay? After that deposit gets posted, after those checks get cleared, you're going to have $21,725 available to spend. Okay? Now we're going to do the same thing to the company's record. Okay? We're going to get our total adjustments. Okay? So we're going to add your error plus your service fee, and that's going to give me an $855 adjustment to the company's records. Okay? So now I can figure out my adjusted balance. Okay? Your adjusted balance is going to be your beginning cash balance according to the company's records plus your total adjustments. Okay? And that's going to give you $21,725. The adjusted balance for the bank statement needs to equal your adjusted balance for the company's records. Those amounts need to be the same. That is the whole point of balancing or doing a bank reconciliation. You have to balance your books to the bank. Okay? If they don't balance, then you made a mistake somewhere and we need to figure it out. You can't move forward until you're in balance. Okay? So, that is requirement A, which is to prepare a bank reconciliation. This is what your reconciliation should look like. Okay? So now letter B says, okay, if the balance sheet were prepared for Creative Design Company on August the 31st, what amount should be reported for cash? Okay, let's do requirement B. I'm going to scroll up a little bit. Okay, so requirement B. So they're asking you, if the balance sheet were prepared, what amount would be reported for cash? So basically they're asking, how much cash should you report in your financial statements that you have? Should you report what you have in the company's records as $12,870? Should you record what the bank has on their statement, which is the $37,600? Or should you record your adjusted balance, the $21,725? Okay. The correct answer is the amount that should be reported, okay, the amount that should be reported is the adjusted balance of $21,725. Okay? Now that balance represents, okay, that $21,725, that balance represents the actual amount of cash that you have available. Okay? What it does, it identifies your outstanding or your reconciling items in each of the records, either the company's records or the bank's records, and it figures out in reality how much money you have to spend. Okay, so the amount that should be reported on your balance sheet is the $21,725. Requirement C. Okay. It says here, must a bank reconciliation always balance or reconcile? Yes. Okay. The bank reconciliation must always balance to an adjusted balance. Okay. So your reconciliation, the whole point of reconciling, like I stated previously, is to make the bank records balance the company's records. The adjusted balance needs to be identified and it needs to tie both of them together. Okay? That is the whole point of reconciling. So yes, must the reconciliation always balance? Yes, it must. Yes, it needs to. Okay? So this is a very wonderful example of how to complete a reconciliation. Now this is a very simple reconciliation to start us off with. Okay? We're going to be doing, I think, one more reconciliation in this lecture. It's going to be getting a little bit more complicated. Okay? But there's examples in your book that you can refer to as guidance. Okay? So now let's move on to the next problem, which is a continuation. Okay? It says, using the data presented in exercise 718, which is what we just completed, now we have to journalize the entry or entries that should be made by the company. Now, we need to look back at our reconciliation. Okay? The entries that need to be made, okay, will always be the adjustments in the company's records. Okay? So, you're going to look at your adjustments and you're going to record an entry for each of the items under the adjustments column. Okay? So, adjustments in a journal format need to be made for anything that you have under the company's records under adjustments. So in this case, we have 2 items. Okay? So we need to make journal entries for these 2 items right here. Okay? Let me make this no fill. Okay? So we have to make adjustments for that $900 error that we recorded, the check that was recorded in error for $1,000 instead of $100, and we have to record an entry for $45 service charge. Okay? Now, we will never, ever, ever have an adjustment or a journal entry be done for anything on the bank statement. You cannot access the bank statement records. The only people that can post to the bank statement is the bank. Okay? If you identify that the bank made a mistake, then you need to call the bank up and the bank is going to make that correction for you. You do not have access to making entries on the bank side. Okay? So these items will eventually clear. The bank will post them eventually once either the outstanding checks clear the bank will post it, or once the deposit clears, the bank will post it. This is the responsibility of the bank. The company's records are our responsibility. We need to make or record these transactions in our books. So the adjustments will be these 2 transactions right here. Okay? Now, how are we going to make these entries? Well, we need to go back and we need to refer to the transaction, the original transaction. Let's look at the $900 item first. So, it says here, for the $900 item, number 5, a check for $100 in payment of an account was erroneously recorded in the check register as $1,000. So we were making a payment. We owed someone money. Okay? We owed him $100, but by mistake we recorded it in our books for $1,000. So if you owed someone money and you were making a payment, what account would you be using? You would be using the account accounts payable. So, what did we do when we recorded this check for $1,000 instead of $100? We took out $1,000 in cash when we should have only taken out $100. So now what do I need to do? I need to put $900 back into my cash account because that's the mistake that I made. So cash is going to increase by $900. Okay? So these are entries being done at the end of the month. Okay? So my cash account is going to increase by $900, okay? While my accounts payable going to be credited for the offset of $900. Okay, so we identified that we were making a payment, okay, of $100, but we recorded it for $1,000 in error. Okay, so let me see here if I can do kind of like a T account. Let me see. Bear with me so I can kind of illustrate what's going on. Okay. So let's do. Here we're gonna have our cash. Okay. This is what's happening to our cash. Okay. Merge in center. So here we have cash, and let me copy this down here. And down here, I'm going to have my accounts payable. Okay. I misspelled payable. Sorry. Okay. So, these are the two accounts being affected. Okay. So, what happened originally was that we had a check for $100, but we posted it in error by $1,000. So, we posted it for $1,000. The original entry is we deducted $1,000 from our cash account, our cash decreased, and our accounts payable balance got debited. Okay, now this entry should have been for $100. Okay, so now what we're doing is we're making the correction. Okay, this is the entry done in error. Entry done in error. And now I need to fix that. My cash that I should have deducted was only $100. So what am I going to do? I'm going to put $900 into my cash account. Okay. Now what's going to happen is, okay, my balance on my cash, it's $1,000. I'm putting $900 back in. My entry is going to be for the original $100 that it should have been. Over here, this is for my adjustment. Okay. I'm going to go ahead and I'm going to credit my $900. Okay. So, my entry over here is going to be for $100, which it should have been. Okay. So, at the end of the day, after I record my adjustment, my entry is going to be left in my cash account for a decrease of $100, which should have been the original entry, and to my accounts payable $100. Okay, so here's the entry that was done in error of $1,000. I posted $900 back, and I am left with the $100 original entry that should have happened. Okay, so I'm in balance. I have a debit of $100 and I have a credit of $100 over here. That is what caused, or this is the effect of the adjusting entry right here. I hope it's not too confusing, but it's just a matter of balancing. Okay, whatever happens to one account needs to happen to the other. In this case, we are putting $900 back into my cash account because we took out $1,000 instead of $100. Okay. Now the second entry that we have to record here is for a bank service charge of $45. Okay. So the bank is charging us $45 to have the account open, whatever the case might be. Okay. So in this textbook, the bank service charges are being put into an account called miscellaneous expense. Okay. And that's for $45. And then we have, what's going to happen? How did you pay for that bank service charge? Well, you paid it with cash. Your cash is decreasing $45. Okay. So what's happening here? You took money out of your bank, $45, to pay for your bank service charge of $45. Okay. So those are the adjusting entries that need to happen. Remember, the adjusting entries are only done for anything that you have under adjustments in the company's records. Okay. So this is requirement or exercise 719. Okay. So that was pretty simple. Now, let's jump over to problem 7.2. Okay. This transaction deals with petty cash, cash, short, and over. Okay. So it says Wyoming Restoration Company completed the following selected transactions during July. And then they give you a whole bunch of transactions, okay? The instructions state that we have to journalize these transactions. That is what we need to do, okay? So we're going to go one by one, and we're going to record these entries in a journal, okay? So let's start off with July the 1st, okay? So on July the 1st, you established a petty cash fund, okay? So a petty cash is basically an account that we have. It's money that we took out of the bank, and we have it in a little box in our company, okay? If anything comes up and we need cash immediately for whatever reason, we can just go to our box and get the cash out. We don't have to wait to cut a check or go to the bank and make a withdrawal, okay? So petty cash is used for miscellaneous expenses, small expenses, expenses not expected to happen. It's money that you need right now. So a lot of these have to do with maybe you're having a meeting, okay? And you're going to provide tacos for your employees. You're going to send one of your employees to go buy 12 tacos, okay? So you give them $20. Go get us a breakfast, right? Or maybe you need to mail some packages out, and you're going to go to the post office, okay? You give your employee money so that he can pay for those postage expenses, okay? Or you need to buy highlighters. You know, you're working on a project and you need highlighters and some boards. You go to the store, Walmart, you buy what you need, you give your employee $20. Okay? These are for unexpected expenses. Now, one person is responsible for keeping track of that money. Okay? They are responsible to ensure that they keep accurate records of who they give the money out to, that any money that is left over is returned along with a receipt, okay? And the proper documentation is maintained, okay? This is cash that we're talking about. So we need to make sure that we keep our cash, okay? So a petty cash is usually money put into a little box with a key, and someone is assigned the responsibility of keeping track of that money and reconciling that account, okay? So in this case, we decided to establish a petty cash fund of $1,100. So that's the money that we're going to have in our business, in a box, in case we have any emergencies, okay? So to establish our petty cash, we're going to open up a petty cash account. So my petty cash balance is going to be debited. Petty cash is just like a cash account. It's an asset that is going to be debited, the normal balance. Now, where are you going to go get the money to put into that box? You're going to have that money taken out from your cash account, from the bank. Okay, you're going to go and pull out $1,100 from your bank account. So cash decreases, petty cash increases. Okay. On July the 12th, the cash sales for the day, according to the cash register records, totaled $8,192. Okay? The actual cash received from cash sales was $8,220. Okay? So we are selling some kind of merchandise. Okay? And according to our records, our sales were $81.92. Okay? So let me do it right here. So my sales, okay, were $81.92. Okay. The cash received, okay, was $82.20. Okay. So we need to figure out, are we short? Are we over? Or are we short? That's the first thing that we need to figure out. Okay. So according to your transactions, you sold $8,192. Yet you have cash in the box of $8,220. Okay? So, are you short or are you over? Okay? Well, we're over. You received more money than what you actually sold. Let's see how much. Let's get our calculator. So we received $82.20 when we actually only sold $81.92. So we're $28 over. Okay? $28 over. Okay? Now, if over, you need to credit there's an account that we use to keep track of our overages and our shortages. We have this account. Let me just put cash short and over. Okay. This is the account that you're going to use in case you're over or short. Every end of day that you balance your box, if you're over or short a couple of dollars, cents, whatever the case might be, this is where you're going to put it. Okay. If you are short, you are going to debit this account. Okay. So, if you are short, you are going to debit. If you are over, you are going to credit. Okay? So this is just some information here on the side that you can have. Okay? So, very important. Okay? We have an account called cash short and over, okay, that we use to balance our sales transactions. Okay? If you identify that you are short for the day, you are going to debit the cash short and over account. If you identify at the end of the day that you're a little bit over, you're going to credit this account. In this particular case, we are over $28. Okay? We received more money than what we actually sold. Okay? So let's record this transaction. This is happening on July 12th. Okay? So the first thing we're going to record is how much cash did you receive? Well, the cash that I received is the $8,220. Okay? That's the cash that I received. Okay? Then in the bottom, I'm going to skip a line. In the bottom, I'm going to record my sales. Okay? Sales is a revenue account. The normal balance of a revenue account is a credit. So under your sales, you're going to put the amount of your sales transactions, which is the $8,192. Now in the middle, you're going to have your account cash short and over. So we identified that we are over $28. If you are over, you are going to credit. Okay? So I'm going to have my account cash short and over, and because I am over, I am going to credit the $28. Now we have our transaction. It's very important that you balance it. Okay, the $81.92 credit plus the $28 credit gives me a debit of $8,220. Your debits need to always equal your credits. Okay, let me save this. Okay, so that happened on the 12th. Okay, on the 31st, we have a lot of things going on the 31st. The petty cash on hand was $47. So what happened? We started off with $1,100, and now we only have $47 left. Okay, we replenished the petty cash fund for the following disbursements, each evidenced by a petty cash receipt. Okay. So then they give you a whole bunch of transactions here. Okay? This is how you spend your money. Okay? So let's figure out what we have. Okay? So what I'm going to do is I'm going to create a little, a table here on the side so I can figure out my totals for each category. Okay? So it says here that we have store supplies as one option. Okay, we have store supplies. We have a delivery expense. Let me okay. So here we have all of our expenses. I'm going to just outline them. We have store supplies, delivery expense. We have office supplies. Okay, office supplies. Why am I doing this? Because I'm going to do one entry in the total for each category. Okay, I have office supplies, office supplies, office supplies. We have miscellaneous admin expenses. Miscellaneous admin expenses. Okay. miscellaneous admin, delivery, I already have up here, and office supplies. Okay. So these are the 4 categories that we have of expenses. This is how we spend the money in our petty cash box. Okay. So the first one I have, July the 3rd, store supplies, $580. Okay, so I've got $580 there for store supplies. On the 7th, I have delivery expense of $90. Okay. On the 9th, I have office supplies for $30. Okay. On the 13th, I have office supplies for $35. On the 19th, I have postage stamps, which are going to be put under office supplies for $50. Okay. On the 21st, I have a repair to the office file cabinet for $60, and that's going to be put under miscellaneous admin expense. Okay, $60. And then I have postage due on a special delivery letter, $28. That's going to be put under miscellaneous admin expense, $28. Express charges on merchandise sold, $135, and that's going to be put under delivery expense. Okay. And then I have office supplies of $25 right there. Okay. So that is where I spent my money. Okay. Now I'm going to go ahead and I'm going to get my total. Okay. I'm going to get my total for each column. Okay. So I spend $580 on, let me highlight this. Okay. So I spend $580 on store supplies, $225 on delivery expense, $140 on office supplies, $88 on miscellaneous expense. Okay. Now, what does that equal? Okay. So that is going to equal, let me get my total right here. That is going to equals that plus the 580 plus the 225 plus the 140 plus the 88 gives me 1,033. That is how much I spent in total during the month. Okay? This is total spend. Okay? Now, how much cash did you say you had left over? It says that we have petty cash on hand, $47. Okay? Cash on hand. Okay. I misspelled hand. Sorry. Cash on hand. So, this is the cash that you have left over in your box. So, if everything is correct and accounted for, that should give you your petty cash total of $1,100. Let's see what it gives us. Okay, so we have $47. So my grand total, okay, my grand total is going to be the amount I spent 1,033 plus what I have in my box, which is $47. I have 1,080 accounted for. Okay, grand total, and this is what we have accounted for. Okay. Now, does that give me the amount of my box? I should have $1,100. How much do I have accounted for? $1,080. Okay, so my petty cash amount, I'm going to deduct it. My petty cash amount should have been, let me just put a little box right. Okay. My petty cash amount is $1,100. Okay. So, let's review. This is where we spend our money. We spend it on $580 on store supplies, $225 on delivery expense, $140 on office supplies, and $88 on admin expenses. the total amount that I spent during the month is $1,033. I still have $47 in my box. So I add those two together, and it tells me that I have $1,080 accounted for. But the amount of my petty cash is $1,100. So, are we short or over? Over or short? Okay. Well, I have $1,080 in my box. I should have $1,100 in my box. That means I am short $20. Okay? We are short $20. We did not account for $20 somehow. We probably gave out a $20 bill and we forgot to record it. I don't know who I gave it to. That's going to have to be written as a under my cash short and over account. Okay? I lost $20. That's basically what we're doing. Okay? So, we're going to use this information to record our entry. Okay? So, I did all of this so you can have it in your head as to where am I getting my numbers. Okay? So, this transaction is happening on July the 31st. Okay? So, what we're going to have to do is we're going to have to record in our books where we spend our money. Okay? Now, this is where we're gonna have to debit all of the accounts so we can. These are expenses to the company. Okay. So, where do we spend our money? Well, we spend it on store supplies. How much do we spend on store supplies? $580. Okay. We also spend it on delivery expense. Okay. How much did I spend on delivery expense? A total of $225. So you're gonna be picking up your grand totals for each category. Okay. What else did we spend? Well, we spend money on office supplies. How much do we spend on office supplies? We spend $140. Okay. We also spend money on miscellaneous admin expenses. And we spend $88 there. Okay. We also identified that we are short $20. If you are short, you are going to debit the cash short and over account. So I'm going to have my account cash short and over for $20. Okay. Okay. Yes, it has a negative here. That lets me know I'm short. When you record your entries in your journal, you never record a minus sign. Okay? They have to be positive numbers. The way that you know that it's a shortage, it's because if you are short, you are going to debit. If you are over, you are going to credit. So by you putting it on the debit column, I know that you were short. Okay? And last but not least, we're going to go ahead and we're going to take money out of our cash. Okay? Our cash is decreasing. Okay? By the total amount, which is going to be the total of the amount that you spent. That's going to be the cash amount that we're going to replenish it for. It's going to be the amount that you accounted for plus the $20 shortage. So that should be, let me see. The cash account. Let me see. 10,000. Okay. So this is the amount that we spent. 1033. Okay. So here on the cash that we're gonna replenish, we're gonna add back the total amount that we spent on store supplies, delivery expense, office supplies, admin expense, and our shortage. And we're going to put that back into our box, which is the 1053. Okay. Which is basically the same thing if you add the total over here, the total spent, 1033, plus the $20 shortage. Okay, that's the 1053 right here. Okay. So, you're putting back into your cash box that $1,053. This is what you spend it on, the different line items, and then that shortage of $20. Okay. So they're asking you a requirement for July the 31st to replenish your petty cash fund. So what are you going to do? You're going to take money out of your cash account of $1,053 to cover all of these expenses right here, basically, okay? And that way, we're going to go back and we're going to have the same amount in the box that we should have. So what we're going to do is we're going to put in $1,053 back into the box, plus the $47 that we already had in the box. That's going to take us back to $1,100. The original amount that we should have. So every time that you replenish, you have to go back to that $1,100 cash fund balance. Okay? So that happened on the 31st. Okay? On that 31st, we also had the cash sales for the day. According to the cash register records, totaled $10,241. The actual cash received from the cash sales was $10,232. Okay, so we have another transaction. Okay, I'm going to copy this up down. Okay, because we have another one happening down here. So let's see what's happening. Okay, so let me erase these numbers. Okay, so according to this, on the 31st, the cash sales for the day, according to the cash register, was $10,241. I'm going to put that here. $10,241. Okay? It says here that the cash received from the cash sales was $10,232. Okay? So you sold $10,241. Okay? And you received $10,232. Okay? So are you over or are you short? Well, we can see here that you sold $10,241. Okay, let me get my calculator out. You sold $10,241, yet you only collected $10,232. So that means that you are short $9. Okay? You are short $9. Okay? So something happened. Maybe we gave out the wrong amount of change. We're short $9. Okay? Now we need to record that transaction that is happening on July the 31st as well. So, how much cash do I have? Okay? That is going to be the actual cash that you received. That's the $10,232. Okay? That's how much you're going to take to the bank, because that's the cash that you collected. Okay? Now we have the sales. This is the actual amount that shows as per your sales receipts. And according to your sales receipts, you sold $10,241. Okay? In the middle, we're going to have our cash. Short and over. Now, we are short $9. If you are short, you are going to debit. So I'm going to debit $9 right there. Okay? If I get my calculator, then I'm going to get my $10,232 plus $9. That's going to give me the $10,241. Debits need to equal credits. Okay? Now, on the 31st, they are deciding to decrease the petty cash fund by $150. Now, it's very important that you read the petty cash section of your textbook, because in there it explains that the petty cash account is only used 3 different times. Okay? The first time that you actually post something to the petty cash account is when you set up the account, just like we did on July the 1st. Okay? The second time that you use the petty cash account is if you need to make an adjustment. Kind of what we're going to do right now. We're going to decrease the petty cash fund by $150. The third time that you record an entry to petty cash is if you're going to close out the petty cash. You're no longer needing it, you're going to close it out. Those are the only 3 times that you use petty cash. Every time that you replenish your petty cash, you're going to use the cash account. You are replenishing your petty cash with cash that you have in the bank. Okay? So you go to the bank, you take more money out, and you put it into your box. That happens every month. You're replenishing it. You're putting more money. You're putting the money that you spend back into your box. So you will never touch petty cash when you replenish. You will touch the cash account. Okay. Now in this scenario, they're asking us to decrease the petty cash by $150. So they determined that we have too much money in our petty cash fund, and we're going to bring it down by $150. So what's going to happen? What's going to happen is I'm going to take money out of my petty cash. Okay? So what happens when you take money out of your petty cash? Does the cash go up or down? Well, if you're taking money out of your petty cash, the money in your petty cash is going down. So your petty cash is going to decrease. Okay? And how do we decrease cash? We credit it. And we are decreasing it by $150. Well, if you take the $150 out of your box, what's going to happen to it? Now you're going to give it to someone so they can go and deposit that $150 into your bank, into your cash account. So your cash account is going to increase by the $150. Okay? So that is what's happening here. We're taking money out of the box by crediting it $150, and we're putting the money into your cash account of $150. There's a lot of things going on in this problem. You need to be able to identify overages and shortages. I put this illustration right here, that way you all can follow. Make sure that you always compare yourselves to your cash received to figure out how much, if you were short or you were over. So you compare what you received to what you sold, and then you determine if you have more money than what you sold or you have less money than what you sold. Okay? For calculating your replenishments, you have to create a little table like this because you need to give me totals. Your transactions are entered in total by category. Okay? So you have to create something like this. Figure out how much money you spend for the month. Add the amount that you have on hand to give you the grand total that you are accounting for. Compare that to the amount that you should have in your box, which is your beginning petty cash balance, and then you can figure out if you have any overage or shortage. Okay? So it's very important. There's a lot of things going on. Make sure you review your book. Go through it carefully and the different examples provided. Okay? Now, last but not least, okay, this is the last problem I'm going to cover because it's just a lot of information. Okay? Now, you will see something similar to this in your test. Okay? So it's very important that you understand this problem. Okay? So, we're doing another bank reconciliation. Okay? So it says the cash account for Paula Medical at June the 30th indicated a balance of $146,035. The bank statement indicated a balance of $181,965 on June the 30th. Comparing the bank statement and the company's canceled checks and memos with the records revealed the following reconciling items. And then they give you items A through F. You are being asked to prepare a bank reconciliation. Okay, so we're going to take this a step at a time. So once again, I'm going to start off your cash balance according to the bank. The bank statement information always goes on top, guys. Okay. So we have our cash balance according to our bank statement, and then down here, I'm going to have my cash balance according to company's records. So let's start off. It says here that the cash account indicated a balance of $146,035. Okay, so this is the information according to the company's records. The cash account for Paula Medical indicated a balance of $146,035. That's our starting point down here. Okay. It says that the bank statement indicated a balance of $181,965. Comparing, okay, so now they've given you this information. So the first thing we have are outstanding checks. Remember, these are checks that we, the company, have written, but they have not cleared the bank. Okay? So we're going to have adjustments here, and we're going to have adjustments down here. Okay? So we usually have two types of adjustments. We have deposits in transit, and we have outstanding checks. Okay? Those are very common adjustments that we have every month. The first one we have are outstanding checks. Okay? The reason I put them like this is because the deposits are positive, the outstanding checks are negative. Usually you want your positive items on top and then your negative items below. Okay? So here we have checks outstanding total to $16,445. Okay. Let's see. Let me see if we're going to be using more information down here. Okay, yeah, okay, so we have it. So we have outstanding checks totaling to $16,445. Okay, so remember, our outstanding checks are always on the bank statement side, and they're in negative. You put a negative sign because that's going to be eventually deducted from your balance. Okay, let me put this over here. Okay, so we have outstanding checks of $16,445. Okay, these are the checks that are pending to clear your bank. You've written them, you've mailed them, you're just waiting for the customer that you send them to cash them. Okay, that is A. Okay, letter B. A deposit of $9,900 representing receipts of June 30th had been made too late to appear on the bank statement. So we made a deposit, but we didn't make the cutoff time, so it's not appearing on our bank statement. Okay, so it's pending. That's a deposit that's pending to be posted. That is a deposit in transit. Okay, so eventually that deposit will be posted into the bank's records. Okay. And remember, we are putting these items on the top. These items have already been accounted for under the company's records. We are just waiting for the bank to update their records with this information. Okay. Letter C. The bank collected $31,800 on a $30,000 note, including interest of $1,800. Okay. So, what the company does, or what banks do most of the time, is, the customer lets them know, you know what, so-and-so owes me money, and they're going to be paying me. So the bank has a collection process to where they collect from the customer and they deposit the money into the client's account. So the same thing happened here. The bank collected $31,800 on behalf of Paula Medical, and they went ahead and they put the money into the Paula Medical's account. Okay. Now Paula doesn't know this. Okay. Until they receive the bank statement. Okay. So the bank goes out there, they make the collection, they post the deposit into the bank statement, they deposit the money into the bank account. Paula is not aware of that transaction until they receive the bank statement. Once they receive the bank statement, then they say, wait, I have $31,800 because the bank collected on my behalf. I haven't recorded that. I need to record that in my books. So those $31,800 are already showing on the bank statement. Now we need to make an adjustment on our books so we can update our book information with that. Okay. So we have an adjustment here. So we have proceeds of note collected by bank, okay, including $30,000 principal plus $1,800 interest. Okay, so this is what we have. We need to record in the company's records that we collected $31,800. Okay, we have $31,800 available to spend due to this collection done by the bank. Okay. A check for $2,000 returned with the statement had been incorrectly recorded by Paula for $200. The check was for the payment of an obligation to Skyline Supply Company for a purchase on account. So, a check for $2,000 returned with the statement had been incorrectly recorded by Paula. So what happened here? Paula gets the bank statement and compares it against the company's records. And Paula identifies that a check that they have in their books was cleared the bank for $2,000, yet they have it in their books for $200. Okay, so the company's records are incorrect. The check was written for $2,000. It cleared the bank for $2,000, but in the company's records, it was recorded by $200. So the company needs to adjust their records for the difference so they can bring up that balance to the correct amount of $2,000. So what happened is that when Paula recorded the entry, okay, they recorded it for $200 instead of $2,000. So they deducted only $200 from cash when they should have deducted $2,000. Okay? So an adjustment for the difference of $1,800 needs to be made, and that adjustment is the $2,000 minus the $200. That gives me the $1,800 adjustment. Okay, so here we're gonna have an error in recording a check, and I need to make an adjustment for $1,800. Now, why is it in minus? Okay, so the check was issued for $2,000. In my company's records, it was recorded for $200. Okay, so this is what happened. The check was issued for, let me make this a little bit bigger. Okay, so my check was issued for $2,000. That is the correct amount. That is how much it cleared the bank, for $2,000. After reviewing the bank statement and comparing it to the company's records, we identified that on the company's records, we recorded it for $200. So there's an adjustment pending. Of $1,800. Okay, that is the amount that we are pending to do our entry for. Okay, we have to do an entry for that $1,800 difference that we haven't recorded. Okay, so we have an adjustment of $1,800 that needs to be recorded in our bank reconciliation. Okay, so how are we going to make that error, or how are we going to fix that error? We need to record an adjustment in our company's records for $1,800. Okay, so we need to take out of our company's records $1,800 from our cash, or we need to decrease our cash balance for the difference of $1,800. Okay, so that way the correct amount is actually reflected in cash. We had made an entry to cash for $200. Now we're going to make another entry of $1,800. If you combine those two, that will give you your $2,000 total. Okay. Next we have, let me see, what do we have here? A check drawn for $170 had been erroneously charged by the bank by $710. Now here we have to be very careful. It says that a check of $170 was erroneously charged by the bank for $710. So the bank made a mistake. So the bank transposed the numbers. The bank, when they cleared the check, instead of clearing the check for $170, they cleared it for $710. Okay? So what do you need to do now? Do you have access to fixing the bank's records? No, you don't have access to fixing the bank's records. What you need to do now is you need to call the bank, pick up the phone, call the bank, and tell them, hey bank, check number 123 for $170 cleared your bank for $710 in error. You made a mistake. You need to fix it. Okay? The bank will take care of it. All you need to do is make that phone call so they can correct it. Okay? Now, while they work on making the correction, that needs to be an outstanding item under the bank statement. Okay? So, the bank has been made aware of the bank error in charging the check as $710 instead of $170. Okay? So, that is a correction that needs to be done by the bank. Okay? Now, what's going to happen is they took away $710 from your bank account instead of taking out $170. So, what will the bank have to do? The bank needs to put into your account $540. The difference. Okay? So, the bank took out $710 from your bank account when they should have only taken out $170. Okay? So now they need to put back into your account, give you a refund for $540. Okay? To make the necessary correction. Okay? The last item we have here is a bank service charge for June amounted to $75. So you get the bank statement and you identify that the bank charged you $75 for a bank service charge. Okay? The bank has already taken out the $75 from your bank account. Now, you need to update the company's records to reflect that $75 charge. Okay? So, I'm going to go ahead and I'm going to put over here my bank service charges, because we hadn't accounted for that in the company's records, and because we are paying for a fee to the bank, that is going to be a deduction. Okay? Cash is decreasing because we are paying for a fee. Okay? So anytime cash is decreasing, you put it in a negative. Every time cash is increasing, you put it in a positive. Okay? And those are all of the transactions that we have. Okay? Now we get to the fun part. Okay? Now we need to get our total adjustments. Okay? We need to get our total adjustments for both the bank statement and the company's records. Okay? So, my total adjustment is going to be my $9,900 plus my $9,900 of the deposits in transit, plus my outstanding checks of negative $16,445, plus that correction on the bank error on clearing the check for $710 instead of $170. So that's going to give me total adjustments of negative $6,005. Okay. Now I can calculate my adjusted balance. Okay. Remember, your adjusted balance is your bank statement balance plus your total adjustments. Okay. And that's going to give me $175,960. Okay. Let me highlight this. That is my adjusted balance according to my bank statement. Now I'm going to do the same thing for my company's records. Okay. My total adjustments are going to be the note collected of $31,800 plus the error on the recording of a check of $1,800 plus the bank service charges of $75. I have total adjustments of $29,925. Okay. Now I can calculate my adjusted balance. To calculate my adjusted balance, I'm going to get my total for the company's record plus my total adjustments, and that's going to give me 175,960. Okay, so if we see my bank statement adjusted balance equals my company's records adjusted balance, those numbers need to equal. If they do not equal, then you made a mistake somewhere. You need to go back and figure out. Maybe you posted something in the incorrect section. But the whole point of reconciling is that your adjusted balance for both the bank and the books equal. Okay? Very important. At the bank statement, you record anything that is pending to clear the bank or any errors done by the bank. On the company's records, you're going to record any errors done by the company in recording any transactions, any items that are included in the bank statements that we had not accounted for, such as that note collected or those bank service charges. Okay, so you need to be able to identify, okay, who is pending to record this entry. Well, if it's in the bank statements, the bank has already recorded it, so then we, the company, are pending to record it. If we have issued the checks, the company has recorded those, but they haven't cleared the bank, then the bank is pending to record it. That's why we put them up here. Okay? So, this is our completed bank reconciliation. That is requirement 1. Requirement 2 is to journalize the entries. Remember that I previously stated that we only record entries for adjustments under the books. Okay, so we need to make 3 adjusting entries, and we need to make 3 adjusting entries for these 3 transactions right here: the note collected, the error in recording the check, and the bank service charges. 3 entries that we're going to be recording. Okay, now let's start off with the first entry. Okay, we need to go back and we need to read what it says. So it says that the bank collected $31,800 on a note, including interest of $1,800. So the bank collected money. We need to record this in a journal. So what did we receive? We, the company, received cash. How much cash did we get? Well, it says here that we received $30,000 principal and $1,800 interest for a total of $31,800. So that is how much cash you received. Okay. Now, this is for the bank collected $31,800 on a note. Okay. So what's my offset going to be? Well, I have a notes receivable. Okay. I had set up a note. Someone owed me money. They were going to pay me later, and we have set up a note, and we had set up a receivable. Okay. Under the notes receivable, it's the amount of the principal. Okay. That is the amount that I actually lend out. The amount that they're going to pay me back is the principal portion. Okay. So that's $30,000. Now on top of that, I charge some interest. Okay. The interest is revenue. Okay. We are generating revenue by having someone else borrow money from us. So we lend out money. Okay, I'm going to lend you this $30,000, but you're going to have to pay me 10% interest, whatever the case might be. Okay, 12%, whatever. So that interest that you're receiving is interest revenue. And the amount of interest collected is $1,800. Okay, so how much cash did you receive? I received $31,800. I'm going to clear my notes receivable for the principal of $30,000. And I'm going to record my revenue of interest that I made of $1,800. Okay. So that takes care of my first entry. My second entry. Okay. It says here, error in recording check. Okay. This is letter D. So a check for $2,000 was returned with the statement had been incorrectly recorded by Paula for $200. The check was for the payment of an obligation to Skyline for a purchase on account. Okay? So, we were making a payment to Skyline for money that we owed them. Okay. We recorded the check for $200 when we should have recorded it for $2,000. Okay. So I need to make an adjustment of $1,800 for the difference. Okay. So what account am I going to offset? Well, it's for an accounts payable. This is money that I owed Skyline. Okay. The amount of my adjustment is going to be $1,800. Well, what's going to happen to your cash? Your cash is going to decrease. Okay. You had only deducted $200 from your cash account when you should have deducted $2,000. So now you're going to deduct the extra $1,800. That way the $1,800 that you deduct today plus the $200 that you had previously deducted will give you the $2,000 that should have been the original entry. Okay. Then we have bank service charges of $75. Okay. So what's going to happen? Remember, for bank service charges, we use miscellaneous expense. That's going to get debited for the $75. How do you pay for your bank service charge? You pay that with cash. So cash is going to decrease $75. So these are the 3 entries for the 3 adjustments under the company's records. Always go back and identify, well, what happened in each of these transactions so you can figure out what accounts need to be affected. If it was a payment to a vendor, then it's accounts payable. If it's money that you're receiving, then it's a receivable. Okay. If it's bank service charges, that goes to the miscellaneous expense. Okay. So it's just identifying what is happening in those transactions. Okay. Now, requirement 3. Let me put that down here. Requirement 3. Okay. Requirement 3 says, if a balance sheet were prepared for Paula as of June the 30th, what amount should be reported as cash? And we have already gone over this. The amount that should be reported as cash. Okay. Let me make this a little bit bigger. Okay. The amount that should be reported as cash on the balance sheet as of June. Let me make that bigger. Okay, so the amount that should be reported as cash on the balance sheet as of June 30th should be the adjusted balance of $175,960. That is the actual amount that you have available to spend. Okay, so you start off with your bank statement balance and your company's records. You identify all of the pending adjustments that are pending to clear the account, any adjustments that are pending, any corrections need to be made, and then that's going to give you your adjusted balance, which your bank statement adjusted balance and your company's records adjusted balance should equal. That amount is a correct representation of how much cash you have available as of June the 30th. So if you're planning on making a purchase, this is what you have available to spend. Okay, $175,960. Okay, so that is the amount for requirement 3. That is the amount that you're going to be reporting on your balance sheet, the $175,960. Okay. Now, I'm gonna let you complete the last problem. I'm gonna let you complete the last problem on your own. It's another bank reconciliation. It's a little bit more complicated because you are going to have to calculate your company's balance for the company's records. Not everything's given, but you need to use your critical thinking to be able to put it together. But the concept is the same. Preparing a bank reconciliation is the same. You're always going to have the 2 clusters of information, the bank statement on the back, on the top, the company's records on the bottom. and figure out why are we not balancing. Why is the bank statement different than the company's records? Okay, so that is it for this short, well, not even that short, but that's it for this video. Please, if you have any questions, do not hesitate to let me know. I'm here to help you. And best of luck. Make sure that you read. I cannot reiterate enough the importance of reading the chapter. So that is it for today. Until next time.